Welcome to the Quiet Voices podcast by RIWI, episode 1.
So I'm just going to begin with a little introduction of the Quiet Voices podcast. My name is Neil Seeman. I'm the founder, CEO of RIWI. RIWI stands for Real-Time Interactive Worldwide Intelligence, specializing in how to tap into the quiet voices, people who do not typically answer surveys or digital message tests in any country of the world. So I'm really excited to launch this first Quiet Voices podcast, and with a focus on China. By quiet voices, we're talking really about people, places, and things that there is a data lens out there, but the data ecosystem, the buy-side investor community, the investor community writ large is often unaware of how to tap into that data set. So we want to give life to those data sets. We want to give life to people who are thinking about these problems, these data problems, in a creative way. So I'm really honored and pleased to have with us for our first Quiet Voices podcast, Charles Poliacof, CEO of Knoema, Jordan Hauer, founder of Amass Insights. I can't possibly do justice to your resumes. You are both leaders in the field of what is now referred to as alternative data. And maybe the first question I'd like to throw out at you guys is, maybe Jordan, just starting with you, is how did you fall into a passion for really trying to understand why quiet voices are important, or otherwise silent data sets are worth exploring to solve really critical data problems for the investment community?
Sure. So I basically started off in the hedge fund industry as the only technologist and the only data focused person in a medium-sized hedge fund, about 20 people, about $1 billion under management, and realized that this was about 10 years ago, they were only using financial market data from places like Bloomberg and FactSet. And I knew there was a huge data universe out there. Specifically, more it was more being used in the marketing sense for digital marketing, display advertising, and I thought to myself, why is this information not being used in the hedge fund industry? So there was all sorts of data sets out there. Some were quiet and some were not so quiet, but as long as you chose the correct ones, the ones that are high impact in the hedge fund industry, that could be very valuable to investors. And so we started off with a email transactional data set about 9 years ago. We pioneered using email receipts in an aggregated and anonymized form to analyze companies like Netflix or Amazon. If you could take a look at 2 million people's email receipts, and you might be able to figure out how much sales Amazon might have in that particular quarter before they actually report, or how many subscriptions Netflix has in that particular quarter before they report their earnings. So that was how we got started, and we've expanded to a lot of other data sets beyond that, more than 15,000 now. And there's just a long tail of data out there. And some of it is valuable and some of it's not, but identifying what is valuable and how it can be used is super useful for investors.
Thanks, Jordan. So yeah, in the business of value creation and insights into alpha, it's just a fantastic story. And Charles, maybe an insight into your story a little bit, and how you fell into this. I think that's always interesting for listeners in the world and fast evolving world of alternative data.
Yeah, so mine is probably a series of happy accidents. I started my career on the buy side as a trader and then an investor. And I think one of the things you come to realize is, as Jordan pointed out, information is the beauty of information is in the eye of the beholder. And a lot of times you're sort of seeking for that, edge, that source of kind of like a differentiated view. So when you're contextualizing your investment thesis, you can understand what the various drivers are. So we kind of early on started focusing on more of a quantamental strategy. So quantamental, before quantamental was even cool, right? And the idea back then was just trying to avoid value traps. We were just looking for inflection points in investment thesis. We can start to think about some of the different levers that we can pull internally, whether it's around trading around a name or managing our exposures or thinking about how we size positions, because those are all components and drivers of alpha. And data is a big component of that. I got into fintech technology, or fintech rather, by mistake. And, it's a combination of thanking my firstborn son and Basil Kanibi over at Novus. I got to give him credit for kind of like dragging me into the world of technology. And once again, joining a firm like Novus and understanding how data can help sort of generate what I would call operational alpha at the time. So it's managers helping them understand what their core competencies are, where they add value, right? If you're a manager that doesn't understand how to manage your exposures effectively, but you think subjectively or on a qualitative basis that you're adding value by doing so, without having that data, you can fall into these sort of like biases that lead to potentially, alpha destroying behaviors without even realizing you're doing it, right? If you think you're a great stock picker, there are lots of managers out there, Tiger Cubs, I don't want to name names, but if you look at their portfolios and their allocations, and you look at the way they size their positions, it looks like the EKG of someone going through tachycardia. It's sort of like up and down really, really quickly. And what you're finding is they're using data to understand where those inflection points in their names, if you would equally weight their names, right, you end up with actually pretty poor performance. So again, this is sort of like the genesis of how like data helps to generate either operational alpha or insights. We called it intrinsic alpha, right? So how I can use data to improve my process, or extrinsic alpha, how I can use data to help inform my investment thesis. And then visible alpha is something very similar also. So being a part of that banking consortium, being part of the executive team there, helping to understand how to take something as simple as like an analyst model, contextualize it and say, okay, I'm looking at Netflix consensus across all these different analysts. Seems to be all the same or very similar. Dispersion there or the deviation between those views is actually pretty narrow. But when you start to unpack it, you go a level deeper, you start to say, okay, everyone's consensus is the same. Maybe this is a little bit of groupthink, but like, look at the differentiation between like ARPUs and subs and how people are getting to these drivers. And if like something like, international growth is going to be a driver, you want to understand how people got to those assumptions. So going beyond and trying to understand the mosaic, and that's kind of part of the thesis. I'm sorry to be taking so long and giving you so much context, but that's kind of this thesis behind Knoema also. So being a part of Knoema and having an opportunity to kind of like, really help steer the ship here and trying to help users of data contextualize that information by bringing sources from all over the world, big data, small data. And we can spend a whole hour just talking about small data alone, but bringing that all together so that people can form their mosaic. And to Jordan's earlier point, the value of data is temporal, right? And just to use a quick example there, if you think about macro data 2 years ago, and how much of a focus that was versus today when you have sort of like an exogenous shock where everyone's really trying to understand, okay, what are top-down drivers and how is that going to impact my investment thesis? The value of that same data changes dramatically. So these are all things we want to consider. Anyway, I can go on and on, but I'm going to stop here.
Yeah, no, thanks, Charles. That's a really good insight. I mean, one of the things I think that binds all of us in the alternative world and maybe all entrepreneurs together is that sense of being bias aware. I love that. I got that from the hedge fund industry and really like that. So yeah, we're here to talk about one area of the world, China in particular, that is a dominating economy, rising in power throughout the world, also in supply chain. We also happen to be talking about this in the context of a recently unclogged Suez Canal crisis. So increasingly aware of the interlocking nature of the world. So focusing on China at first, simply because that is one area of the world where investment professionals hold different views of the reliability, the veracity, and hey, what can you even get out of China that will help on the buy side or to leverage any type of insight of value. And so Maybe Jordan, for you first, when looking at China, can you give us a shape of what's out there that really excites you in terms of getting an insight into whether it's a big name or a bigger macro trend that might be going on inside China? Thank you.
Sure. There's a lot of data sets coming out of China, whether you're looking at the companies that are in China or whether you're trying to monitor China from outside of China. So there's plenty of ways to monitor China through alternative data. I will say that it is more challenging because of regulatory issues, because of the regime there and how close they are, and the Great Firewall. But with the right partners, with the right relationships, there is definitely a lot of options there. So one example of China data that you don't even need to have relationships in China is satellite imagery, for example. There's a company called Ursa Space that does SAR imagery, where it's infrared, so they can see through clouds. You don't have to worry about weather, and they started off their business focusing on oil drums and figuring out, how much oil is being stored in different containers around the world. And their most subscribed product was their China data, because it was China. Sometimes they don't report correctly exactly what they're storing, even though they're supposed to be. And so with this imagery, you can take a look at the shadows of these variable oil drums, and figure out how much oil is being stored there. And you could also use satellite imagery to understand where it's being shipped, and that goes along with kind of the Suez crisis. You can actually track ships going around the world. They're supposed to have AIR transponders on each ship, but that is not always the case, especially with a regime that may not want to put that data out there. So there's been issues with trusting data coming out of China in general. But another way is creating relationships with companies that are trusted in the China industry. So we have some relationships with transactional data providers in China. And obviously, credit card transaction data, I would say, is maybe the oldest alternative data set out there. It's been probably used for about 15 years in America, but it's still kind of a new wave outside of America. So we have a relationship with a company that tracks e-commerce transactions by scraping websites in China. All of the Alibaba websites and the other e-commerce marketplaces, and that data is actually basically open because it's publicly posted, and so that could be also gathered by other companies outside of China. But when you have a relationship with a China-based company, there is a lot more comfort there in knowing that data is not going to be shut off, that they are actually dealing with the authorities in China. Every company in China needs to have a legal representative that is on the hook in case something goes wrong, in case they do something wrong with compliance. So when you have that kind of comfort, you know that if you put your own investment into that data source and you're doing analytics and you're creating trading strategies based on that data, it's not going to be shut off. But you do have to keep that in mind, and if you don't, then you could be wasting a lot of time and effort.
So Jordan, I detect some optimism there, and at the same time, I detect some caveats around.
Very optimistic. There's a lot of data sources that are just coming online from China.
Exciting. So Charles, why don't you weigh in and provide your perspective? Thanks.
Yeah, I'll try and be as creative as I can. So with China, like I would think of the world world through the lens of inside out versus outside in. So inside out, there's obviously data that comes out of China, right? Reporting agencies, and there's lots and lots and lots of sources. I can point to hundreds of sources if anyone's interesting of like publicly available data that comes out of China that is used to report on a whole host of different things. Obviously people can question the validity of that. And there has been some debate in amongst thought leaders as to how much credibility to give to that data. But at the end of the day, this is what the Chinese government is saying is what the data is, and we take it for face value. Then there's the outside in point of view, which is, obviously there are data providers, some of which that Jordan had highlighted. Web scraping has become an enormous, tool that people use. And there's lots and lots of ways to be able to go to, JD.com, Alibaba, and all these other, I can give you a huge list of sites you can go and visit. You can web scrape and extract information from those websites. And then of course, there's also things like, bills of lading. Web scraping is obviously a gray area, just to be clear. But there's also things like bills of lading and other areas where you can think about where you can derive data. But like at the end of the day, this is about a mosaic, right? You're working with, and whether it's where there's a lot of transparency or a little bit of transparency, there's always some degree of opacity, depending how you dial that up or down, right? So at the end of the day, what you're trying to do, whether you're an investor or somebody's trying to formulate some sort of thesis requiring a different set of inputs, is you're trying to compile this mosaic. You're looking at all the different tiles that are available to you, and you're trying to evaluate how best you can synthesize whatever inputs you need in order to come up with some sort of outcome or decision framework that'll help drive whatever decision you need to make going forward. So I think as people go out and think about what are the 3 V's again? I think it's volume, variety, and velocity, right? I forget what the 3 V's of big data are, but as you think about those 3 big V's, right? Like, how are you going to think about putting that investment thesis together? And I think I agree with Jordan with his optimism, where we're just seeing so much more data come online. What's the IBM statistic? 90% of the world's data has been created in the last 2 years. Like, from my perspective, we're just getting started, right? When there's companies in the Dow 30, right? The Dow 30 that are now thinking about productizing their data assets, right? That means we haven't even gotten started yet. So there is a lot of information that's going to be coming online. And I think people are going to have to think about, where can I get that information? How can I trust that information? And what makes sense in what context? Anyway,
yeah, that's
I
Charles.
can go on and on. So.
No, for sure. I mean, that's a really good historical context, just the speed and pace of change that we're in today with respect to data and innovation. On the veracity point, yeah, we've been in the business at RIWI on China truth seeking. And so we've got a lot of research having looked at on our research on our website at RIWI.com, for those who don't know, just looking, for example, the Purchasers Manufacturing Index and other official indicators coming out of China, and really trying to ground truth, if you will, the veracity of those data. And we are, just to add to that sense of optimism, we're seeing a lot more inbound interest in that type of data. Charles, you mentioned the word opacity, which is a really, I didn't actually used to use that word prior to getting into the business of alternative data for finance, but I find it very interesting. To what extent do you feel certain investment professionals prefer opacity of markets in the sense that, hey, they can get a massive information advantage if they leap beyond that, versus actually having full, having a sense of the opposite of that? I mean, to what extent does that affect different business models in the alternative data ecosystem?
Well, I mean, I think this notion of having sort of like asymmetries of information, and I don't mean this from, through the lens of like MNPI, but just being able to have a unique perspective on investment thesis goes all the way back to like the 1920s. That's the hypothesis behind value investing, right? Value investing is all about, there is a disconnect. Somehow this story is misunderstood. I have an insight that helps me understand why this company's valuation will be greater than everybody else. And that's what makes a market, right? I think today, you're just introducing a lot more information into sort of what those drivers or that thesis is. So traditionally, Jordan had alluded to this before, where people looked at fundamental data to establish an investment hypothesis. Then people, as they started evolving their trading strategies, people looked at different drivers, how to trade, factors, thinking about top down versus bottom up and combining all this information. And now people started using other data assets, and we can point to specific examples, but very high level, right? All of a sudden people are looking at this massive variety of data to help influence the investment thesis. So, to your question, Neil, if I'm an investor and I have some access to some data, even if it's publicly available, right? But nobody knows about it, I'm very happy for people to continue not to know about it, because at the end of the day, this is helping me understand a story maybe a little bit better than everybody else. And by understanding that story a little bit better, well, then I have an investment edge as well. So I think everyone here at the end of the day is just trying to vie for, how can I get the most accurate picture possible, whether it's proving or disproving my investment thesis. And I think there is a little bit of an arms race taking place right now among investment managers, even among some corporations who are asking themselves, okay, what is my source of edge? And if data is that source of edge, well, then what kind of a machine or series of machines do I need to build within my organization in order to optimize that edge? And that's going to depend on your investment approach. It's going to depend on the infrastructure that you have available within your organization. And it's also going to depend on, how ubiquitous and available these data assets become, right? There's lots and lots of businesses that exist today that couldn't exist 5 years ago because the technologies simply weren't there. And I think we're going to continue to see that acceleration, especially with a lot of these businesses that are coming online, sort of the data lake 2.0 with Snowflake and all these other things are happening. So anyway, I don't want to go off on too many tangents, but I hope.
But that's a really good point. It's more than just the data assets. It's the data ecosystem, the data ingestion, the way companies can work together that actually can amplify alpha. I mean, Jordan,
you don't mind me jumping in here?
Yeah, please do.
Just to add
go ahead.
To what Charles was talking about, opacity and asymmetries of information has been the business model of these larger investment funds for as long as any of us can remember. But the value of data and the value of these asymmetries of information depends also upon the strategies that these funds are employing. So certain funds kind of feed off of long-term asymmetries of information, and certain funds feed off of short-term. And it also depends on opacity of information is only valuable if that information actually becomes known to the rest of the world at some point in time and reflected in the stock price of the company. So if you know something about a company that nobody else knows about, but nobody else learns about that at any time in the future, then there's no value to that. So you really need to make sure that the information that you're monitoring is going to actually be reported on in the future, which is why a lot of these quantamental funds and quantitative funds have been focusing on KPIs, very important pieces of information that are usually hidden kind of in their filings. So for example, we used to monitor international versus US Netflix subscribers, whereas most people focus on just kind of the total number. If you broke that out, you could really understand Netflix a lot better. And there's a lot of that's kind of a high level example, but there's a lot of lower level examples, things that are hidden in footnotes of filings that you could monitor and really get a good sense for where a company is headed.
Hey, thanks, Jordan. That's a really, really good insight, gems of data. Thank you. I mean, Charles, we talk a lot in the alternative data ecosystem about big data, right? But when I think about quiet data, quiet voice data, silent data, I'm also thinking of just small data sets that haven't actually been leveraged, opportunistically or appropriately. In your recent experience, is there any sort of small data set that you can point to that's an example of something that's potentially game changing or just been highly educational to you?
I don't know if I would, it's funny, like we use the words alternative data. I think alternative data was kind of like alternative when it wasn't as mainstream maybe as it is today. I find that you're seeing this convergence where it's just really kind of like all data at the end of the day. Like even in our organization at Knoema, we try to get people to stop talking in terms of like alternative data and all these other data assets, because we really want people to start to understand that like, data needs to be contextualized. Like we can't rely on one point anymore. Just to Jordan's point, you were talking about Netflix international versus domestic, like even trying to understand how to decompose that and just understand what those drivers are, right? Like, is the growth going to come from revenue per user? Is the growth going to come from the number of subscribers? How do you decompose that and understand what those value drivers are, right? When you talk about small data versus big data, Neil, like there is a plethora of sources now, plethora of public sources that are, I wouldn't call them tiny sources. It's just that you're not talking about going to like the OECD and getting 7,700 data sets or plugging into BPipe and getting all of the curves, all of the, the data, which is terabytes of data, or the Experian database where you're looking at, I think, something like 11 terabytes of data, right, that you need to process and understand. These are small data assets that are at the regional level, at the municipal level, but that tell an amazing story. They tell an amazing story about commodities. They tell an amazing story about agriculture, survey-based data. Would you call survey-based data big data? Not at all. But how many interesting insights can you glean from something like survey-based data? So I think the challenge for organizations is really twofold. One, the sheer breadth of the information that's available to you, and that you can no longer go to one or two or three places to source information. You have to actually go to a lot of different places, right, to understand what's out there. I think number two, variety introduces a lot of challenges. Variety requires some understanding to contextualize the data, to understand the value of the data, to understand how to use that data, where it applies in your business, in your model, in your thinking, right? So when you think about small data, you have to ask yourself, how do I find all these different sources? How do I understand what's available to me? And then once I have access to it, how do I think about contextualizing it and making it useful? The ugly truth about data is that 90% of the time spent on data is just around making it useful. I have to find what I need. I need to bring it into my environment and massage it somehow so I can work with it. I need to contextualize that with other data assets. Like, how do I do that easily and seamlessly? Oftentimes you lose the battle through attrition, because it's so hard to go from like, I found what I need to know I'm using it. You're like, the heck with it. I'm going back to what I used to do before. So those are the challenges. But like, if you can solve for that, the breadth of information that we have access to today, right? And the way we can weave that into the way we think about, again, developing an investment hypothesis, thinking about making a policy decision, right? Policymakers, think about all the decisions people had to make. The state of Texas is a great example. If you go to, texas2036.org, it's a website where the state of Texas has made all their information publicly available. And not only have they done that, but they encourage lawmakers to use this information to actually craft policy. So imagine that, like data-driven policy, right? And you're seeing this on and on and on across all these different areas. So this is where like variety of data and the breadth of this information, not big data assets, not these 11 terabyte files, but these like small 100-row, 200-row, 1,000-row data assets, right, that are filled with valuable information, right? That's what you're seeing kind of firms both struggle with, but really appreciate what's available at the same time, if that all makes sense.
Yeah, no, it absolutely does. And thank you, Charles. And there's a question for you, Jordan. Well, imagine if you're Charles, imagine if you're yourself. I mean, how in this context do you recommend that your typical investment firm with say 1 or 2 billion assets under management evaluate just the large stream of data vendors that are coming out there. What has to change or evolve within the ecosystem, the buyer ecosystem, to make sure that everything is sort of a win-win from the vendor perspective and the buyer perspective?
Well, I would say start small first, especially if you're a medium-sized fund like you mentioned. You're not going to have a huge team that's going to be able to ingest thousands or hundreds of data sources. You really what I would say is start with a thesis, start with a question, start with something that you're trying to answer. If you're in the course of your current investment process, you are looking deeply into a particular name, to say to yourself, what information do I wish I had, and then think to yourself, I'm sure that it's impossible to find. Don't think that. Assume you actually can find that information. If you can dream it, it probably can be done these days with data. So as long as you're asking the right questions, and you have the right relationships. If you want to know about any of the 15,000 data providers that we've figured out there, contact me, Jordan at amassinsights.com. A little plug there. Sorry about that. It's really about having also a process in place. So you can't. It's not just about learning about what the data sources are out there. It's also about setting up a trial, doing some back testing. Figuring out whether, how you actually would use that data set. Are you the type of firm that is going to trade automatically on that data set? Or are you the type of firm that's going to, put together visualizations and figure out, from a fundamental perspective, whether this data is, affecting the name that you're researching in a positive or negative way. And really being rigorous in terms of your process is one of the things that I've been seeing that the better firms are doing, and the ones that are kind of being left behind are those that are thinking about this and in a way that is not rigorous.
Yeah, no, thanks, Jordan. That's a really good insight. I mean, Charles, I'm going to give you the same question actually about the data buying ecosystem and what advice you might have for a mid-sized fund when evaluating. And I sort of a bit of a twist in the question, which is to what extent are there some firms that are working more collaboratively with data vendors? Because sometimes data vendors can adjust as they work collaboratively. Are you seeing that trend evolve? Anyway, any insights on sort of building off what Jordan said about advice for funds would be great.
Yeah, so there's a lot you're asking, so I want to unpack it all because there's different components to it. So specifically, if I'm a fund and I'm trying to understand what's available to me, I think the first thing you want to do is ask yourself, like, who do you want to be? Like, if you're a long-term value investor, then what is the value? What is the edge that you're looking for from data, right? I think that's the very first thing you want to do, because you're going to use different data assets to inform your investment thesis than if you're somebody who's going to have maybe a little bit higher turnover in the portfolio, or somebody who's going to be maybe a little bit more market neutral and has to be more sensitive about how they manage their exposures. So, right, I think the first thing is, how do you think about data as your source of edge? Because some data that somebody's looking at every single day, if you're a long-term investor, it's actually almost meaningless. The only thing you care about is your thesis is intact. And if there's a price dislocation, there's actually value in buying that data. So you're not interested in short-term price oscillations that are being driven by some short-term inputs. Now, the danger there is if your investment thesis is based on a subset of information that could potentially be completed by other data assets, right? And that's when you want to start to think about. So I guess the first question you want to ask is, what are your drivers? And the fundamental guys know this better than I do. So I'm stating the painfully obvious here. But what are the drivers? And then how do I make sure that I have that information I need? I think to Jordan's point, there's a lot more information that's available today than there was just a few years ago. Now, in terms of the state of the ecosystem, You're seeing a lot of exchanges come online. You're seeing companies like Snowflake that are introducing things like data provisioning, which limit the need to start moving data back and forth between organizations. So you're seeing new ways of interacting with and consuming information, right, that I think didn't exist before. You're seeing different engagement models, right? I think it's IEX that just introduced a metered consumption model, and you're going to start to see other new and interesting subscription models that are out there in the marketplace. They're going to make the access to data more interesting. Now, there are some barriers of access, right? One is the MSAs are all different across firms. So oftentimes the obstacles aren't technical obstacles. They're actually more legal obstacles, right? If it's going to take me 12 weeks from the moment I found a data asset to engaging the vendor, going through legal, going through compliance, right? Going through the evaluation process, and then bringing it into my ecosystem or bringing it into my workflow, well, then that's a tall barrier to access. And it's going to continue to introduce friction, right? So what we want to try and do, all of us as technologists, as participants in the ecosystem, is try and reduce that friction in any way we can, right? Reducing those barriers to access. At the end of the day, if you're a data vendor, right, your goal is to try and get your data in the hands of as many people as possible, right? Neil, I'm assuming that's your goal, right? You want to optimize for like, hey, RIWI's got some great perspective. We want to get that in the hands of everyone we can, right? So reducing those barriers to access, trying to help people understand how can I contextualize that data, right? One of the big issues that I see in general is that people don't understand the use cases. I sit in all these meetings, right? And people are like, okay, how do I use that data? How would a private equity firm use that data? How would a value firm use a value-oriented long-only firm use that data? How would a macro-oriented firm use that data? How would insurance companies use that? Everyone has, and it's the same data, but it's contextualized differently. It's used differently. So I think that education is important too, right? And I see this in all meetings, right? Where oftentimes we find ourselves being educators, where it's like, did you know that you could do X, Y, Z, right? So I think the easier it is to communicate that. So I guess if we were to break this up into subcomponents, being able to articulate that value proposition and understand how to contextualize data for the different sort of like constituents that are out there, I think is critical, right? Quants are quants. They're going to want the data in its rawest form. They're going to take it. They're going to back test it. There's something there or there's not, and they move on, right? I mean, but everyone else requires some degree of education or contextualization, right? Then there's the technical hurdles and the legal hurdles. So I think once we're able to overcome those hurdles, like anything else, the access, the time to realization, which is probably the most important measure you can think of right now. I have an idea. How do I go about implementing that idea? Right now, it's very, very long. You're going to see that truncate over time, and that's when you'll see the ecosystem continue, adoption just continue to accelerate.
Wow, that's a great note of optimism, Jordan. Yeah, what's
one of the reasons that cycle is so long, as Charles mentioned, is because there is a lot of education needed on both sides, and don't expect specifically a hedge fund, like as the data consumer, to educate the data provider on how they are using the data currently or planning on using that data. They're going to keep their cards close to the vest, at least the most of them will. But data providers also often need education on how hedge funds operate and how they make their money and how they use data. If you have that kind of education already in house, then you're able to basically educate the consumers on what can be done with your data, at least in that context. So that's why there's firms like Amass Insights and Knoema that sit kind of in the middle, trying to educate both of those sides on what they should be doing and shouldn't be doing, and what the data can or can't be used for. So I think it's important to have all these different parties in the ecosystem, and it's just going to continue to make all this alternative data, I call it external data now, more valuable.
A nice point. I mean, at RIWI, we talk about system two thinking, right? Which is popular in the finance industry, right? Daniel Kahneman's distinction between system one, system two, and thinking collaboratively. So we're educating one another. I would have never imagined that I'd be sitting there educating people in the hedge fund industry around how to use alternative survey data from China or alternative digital test data from parts of Africa. So, I mean, I'm gonna just sum up a few points that I've learned today. I mean, one that really hit home was a point, Charles, you made about, hey, it's more than just the data. It's the data is sort of exploding, but it's also about these new forms of ingestion, the new business models that are evolving. That's just making this tremendously exciting. I also get the sense, Charles, that hey, we're on the brink of a new world. I personally, I've never been more excited about the opportunities of the data ecosystem for finance as I have been as a result of this conversation. And then Jordan, I mean, again, that sense of optimism, of the art of the possible, and the assumption of going in saying, hey, that data is out there, that problem can be solved. So it sort of turns sort of the thinking on its head. So that's what I got the most out of today, although I really enjoyed the conversation. And maybe Charles, maybe you can reflect on what you got the most out of in this conversation, and then also tell our listeners where they can reach you and find out more about you. Thank you.
No problem. Look, it's always great to come on a program like this and have the opportunity to hear different people's perspectives and collaborate. So I collaborate on ideas. So ideation is great, and I'm grateful for you asking me to join today. As far as where I can be found, it's pretty easy. Charles at Knoema.com. Knoema is spelled with a K, Knoema.com. And you can always go to our website. We make a lot of the data that we have access to publicly available. So there's something like 57,000 data sets that are available for anybody to come in and peruse, and that data connectivity is always growing. We are not it's interesting because we have so much data, but we're really a data technology company. We view ourselves much more of a connector and a creator of experiences around data, around discovery, around ingest, around delivery, around utilization, workflow integration. Then we really do think of ourselves as a data provider, but we do happen to have a lot of data and connectivity to a lot of data for what it's worth. So again, don't want to take up too much air here. So I just want to say thank you for having me here today and enjoy the conversation.
Yeah, thank you, Charles. Tremendous gratitude. And Jordan, can you weigh in on sort of what you gained the most out of this conversation, and also importantly, how folks can find you? Thank you.
Sure. Yeah, I mean, from my perspective, the theme of the entire podcast really hit home with me. Quiet voices. I've always kind of thought of myself as a quiet voice because, I was never. We were pretty stealthy for several years, and there's a lot of expertise out there with people like me that are working in the data industry, maybe are more technical, but are really important to making sure that data, the value of data is being gathered from the right participants. And there's just a whole mess of data that's out there that has not even been discovered yet by the right people. And I think that I hope that this podcast will explore some of those sources, and so that's one of the biggest takeaways that I have from this. And in terms of more about us, we're called Amass Insights. The website is AMASSINSIGHTS.com. What we do is we work with hedge funds typically, but also any data consumer to help them source unique data anywhere in the world. We've built our own proprietary taxonomy to categorize those data sets in as much detail as possible. We've identified more than 15,000 data providers that exist in the world. Things that run the gamut between satellite data, like I mentioned, transactional data, social media data, and the list goes on. And on the other end of the spectrum, we also work with data providers to help amplify their reach of their data sets to get them in front of the right decision makers at data consumers, and help them monetize their data assets. And just one last plug, we just launched Big Data Protocol, which is bigdataprotocol.com. It's a kind of a Web3 crypto version of our data marketplace. So check that out if you're interested in cryptocurrency.
Jordan, thanks a lot. That's a really exciting initiative. I look forward to learning more about it. Here at RIWI, we're a big believer in quiet voices, making all voices count. Really believe that whether it's the introverts, the quiet ones, the silent ones, you can just generate enormous impact by searching for gems that may not be loud and expressing themselves loudly in the data marketplace. So really excited to kick this off with you guys. You're great guys, and you're also a great entrepreneur. So I'm really proud to be kicking this off with you guys.